Hello traders, the title of the video is Eagle Eye Frankfurt trader uses Elliott wave theory to interpret a DAX 30 index. So the DAX 30 represents the 30 blue chips in Germany. Wie geht's? Alright. Ich wünschen Sie schöne Jahre. Alright, so I wish you a happy new year. Today is the 30th of December 2018, and I'm wrapping up the year. Alright, so today I've been talking about Nifty 50. I was talking about Sensor. I was recording videos about all major indices. I still got one video to record today. I will be talking about the Nikkei 225 to wrap up 2018. All right. So happy New Year to you all, even if you are watching the video in 2019. Eagle Eye Frankfurt trader uses Elliott wave theory to interpret a DAX 30 index. All right. So I'm on the monthly chart and I have a data from 1975. That's a beautiful. I think we have enough data for a DAX 30. Beautiful, all right. All the data, I think we have sufficient data to analyze, the DAX 30. I'm very, very pleased with that, okay. So we can say, looking at this chart, if I can see clearly on this monthly chart, so I think you are thinking, George, you need glasses? No, I don't wear glasses at all. I have eagle eyes. So there was a kind of a consolidation here between the two green line that you can see here, and then we see a breakout and the price start running. Okay, in fact, this is the first wave that was subdivided into 5 mono wave. I would say this is the first mono wave, and then blah blah blah, flat correction, blah blah blah. Okay, second wave, and then third wave somewhere here, fourth wave, and the fifth mono wave. Talking about mono waves of the first wave. Do you agree or disagree? All right. You disagree. All right, stay put. Don't go away yet, even if you disagree. Putting a vertical line at the end of the first wave, then we have a second wave that is starting here. So, second wave, sometimes may say, this is the end of the second wave, and which is the 2009, the reference point for the stock market, the S&P 500. Began a bullish trend in 2009. Oh, am I talking about? No, that's not 2009. 2009 is somewhere here. So this second wave, if somebody is calling this second wave, that person may say this is the second wave ending in 2002, end of 2002, and the commodity boom from this section here. All right. Then it pulled back. So let's call this for now. This is my preliminary wave count. So say first wave, second wave, and we say from 2003 the DAX 30 was going up, forming the third wave. All right. I know that I may say, George, that's wrong. This is not the second wave. And I would say, why? Why is it not the second wave? I'm moving some line now. What have I done? Okay. All right. All right. So I don't know that I may say this is not the second wave. So that person may say the second wave is starting here. So for that trader, that will be the first wave, and he or she may say 1, 2, 3. 3 represent correction, George. Don't you know that? This is the second wave. And this is the beginning, 2009, the DAX 30, like the S&P 500, has started a new trend to this point here. So that trend has been argued and say, first mono wave of the third wave, second mono wave, third mono wave of the third wave, fourth Oh, my apology to traders. That need to be done. The fourth minor wave and the fifth minor wave of the third wave. Do you agree with that? A second trader that is calling this the second wave? Probably that's correct, okay? So, do you accept that? Do you agree with the first trader that is saying this is the second wave? Or, so first wave, second wave, and from here, all the way up here, third wave, expectation of the fourth wave, okay, and then the fifth wave. So we are now in the fourth wave, like the S&P 500. As I mentioned to trader before in my previous recording, is that the DAX 30 is duplicating very often the price structure of the Dow Jones Index. So if you trade Dow Jones Index, you might as well trade the DAX 30. If you can handle the Dow Jones Index, you can perfectly trade the DAX 30. It's just following the Dow Jones Index. I did not say S&P 500, I did not say Nasdaq 100, but the Dow Jones Index. All right? Almost. It's almost. Though we didn't see a triangle here, but you remember for the Nasdaq 100, the S&P 500, we were seeing a triangle at the end here, but there was no triangle in view here. All right. So why do we need to look at the chart from different angles? Why am I talking about a different type of wave count? The reason is that we need to go into the mind of other traders to see from their viewpoint. All right. So I will go personally with this one here, saying that there was a trend in first, and then 1, 2, 3, all right, and then we have the third wave here. Also, it will align with our Elliott wave guideline. We may say that there was a trend in first, which was the first wave of a higher degree. Then we have an inverted head and shoulder pattern. This is the left hand side shoulder. This is the right hand side shoulder. And this is, oh sorry, this is, what am I saying? What's the time now? It's 8:30, it's time for dinner in London now, okay? So this is my last video today. So this is the left hand side shoulder, this is the right hand side shoulder, and this is, you see, I'm getting hungry now. This is the left hand side shoulder, this is the head. Oh, it's the head, yes, not the right hand side, this is the head, and this is the right hand side shoulder. So following our guidelines, we will go with this one and say beginning of the third wave from 2009 for the DAX 30, like the S&P 500, going up, going up, going up. Some traders may come again and say, oh, probably it's here and so on. But if you compare the first wave count, even the third one that may say that is from here the second wave, we can say that there's no big difference because in this section, we are all talking about corrective wave. Another thing that may say is W, and then when the commodity boom has started, it has formed the X wave. Don't can't you see that? And then we have this section down to form the Y wave. So it's W, X, Y wave. Okay, good. Not bad. Not bad. It's not inverted head shoulder pattern. But when you are talking about inverted head shoulder pattern, you will be talking most of the time about WXY wave in most cases when you are counting wave. So WXY wave, happy? Or 1, 2, 3 right there. Correction. All in all, there was a correction after an impulse wave. We all agree on that. Okay? And then we have another impulse wave, first minor wave, second minor wave, third minor wave all the way here, fourth minor wave, and the fifth minor wave of the third wave. We are now in the fourth wave for the DAX 30. How far will that fourth wave go? So one strategy that we use, that we apply Fibonacci, that's why I was placing on my chart, Fibonacci retracement. We apply Fibonacci retracement to the third wave. Okay, so if you call this second wave, so you do Fibonacci extension to that third wave. And your projection for the fourth wave will be 138.2%. Fibonacci extension level of that third wave. That's the green line there. So for somebody that is calling this the end of the second wave, his first projection or support level for the end of the fourth wave, the projected fourth wave, the forecast fourth wave, will be at 9818. Very easy number to remember. 9818, 9818, 9818. Easy number, isn't it? That's the green line there. Alright? That's where you will put it first. Alright? Another trader may apply Fibonacci. Will apply a pitchfork tool. Put the first point at the beginning of for the first wave, second point at the top of the first wave, and the third point at the end of the second wave. And that person may draw a pitchfork tool like I did on my chart. So that person may say, alright, if he breaks below that level of 9818, which is the 38.2% Fibonacci retracement level of the third wave, because very often the fourth wave is a shallow correction. So it shouldn't be deep in normal condition unless there are other market events that forces to become a deep retracement. So that trader will put it first at 9818. Another trader using the pitchfork tool, as I already explained it to you, will be expecting to go a little bit below that 9818, touching the median line of that pitchfork tool right there. If you want me to do it, I will do it. You may say, Joe, what are you talking about? Put another horizontal line there for you guys at 9303. So the projection for the target for the fourth wave, professional trader will be watching the support at 9818 and also the support level at 9303. Another beautiful number. Can you believe that? 9303, 9818. Oh, look at those beautiful numbers. Do you like figures? Do you like numbers? All right, if you have done math before, you like numbers. 9303, 9818. Can you forget that? Easy to remember. So those are the targets for the fourth wave. Does it mean that the fourth wave will definitely come there? No. Does it mean that the fourth wave cannot break below 9303? No. It can come down even to this median line of the lower half of the P4 tool. All right. If it comes here, will it violate the Elliott wave? It will be retesting. Look at that. So those are the questions you want to ask yourself while you are doing Elliott wave analysis. So talking about this median line, so you have to draw a line here at the top of the first wave. You see that blue line? So if we have a deep fourth wave, so apart from 9818 and 9303, watch out 8148. This is also a nice number because you have 8 there, 8 at the end of the number, 8, 1, 4, 8, 8, 1, 4, 8. That's the blue line there. So those are the 3 key levels for the projection of the fourth wave. Does it mean also that the price cannot turn around before the first target? It can turn around here now, at the level where it is now, 10558. It can turn around there. If that candlestick bar is closed, all right, that's the month of December 2018, what do you need to do? One step at a time, my friend. Don't rush. Just draw a line there. There's already a line there, the red line. Can you see there's a red thin line there at 10558. So you now, at this point in time, as that candlestick bar, if it's closed, you give priority to bullish signal above 10558 and priority to bear signal below it. So if you drop down to the daily chart, you break below it, come down to retest probably this green line here, trend line here. And then went back up to retest that level, that support level and further resistance. Then you can pretend, to look for an opportunity to sell it back down, all right? But it can find support above 10558. So one step at a time. So those are the prediction, market prediction for the fourth wave for the DAX 30 without any Elliott wave violation. All right? But another trader that is calling, so this is it. We are looking from our own viewpoint. What am I want to move number 2 on here. We are seeing it also from the viewpoint of other traders. So if somebody else is calling in here, that trader, will apply the third way. We'll start from here. So you will draw your Fibonacci extension from here. all the way up there. And you highlight the 38.2% Fibonacci retracement level. Another key level that you want to watch is the 50% Fibonacci retracement level of the fifth wave. Sometimes the price will be below the 38.2% level. I will be seeking, okay, the psychological price level, which is the 50% Fibonacci retracement level of the third wave. But when the fourth wave goes down all the way to the 50% Fibonacci retracement level of the third wave, that's a deep retracement. I don't expect it to go all the way to the 50% Fibonacci retracement level in normal condition, unless there are other external factors that forces other external factors that force the fourth wave to become a deeper retracement. All right. So first wave, all right. Second wave. Another thing let me see here, and let's see third wave. I'm more for this one here. Second wave here, third wave there. Projection for the fourth wave, as I already mentioned them. Okay. If the fourth wave is completed, all right. Remember, fourth wave is a correction. The fourth wave can also be a triangle, so you may count down here. You may say, oh, it's going to become the fifth wave we begin, and then you go up a bit, and then come down. You say, oh, what's going on there? 1, 2, 3, 4, 5. A, B, C, D, E in the fourth wave. 1, 2, 3, 4, 5. You say, oh, Joe, you said that you're going to go down straight line like this and go up straight line like this. All we are saying is that we are now in the fourth wave. It's a corrective wave. Can be in straight line. Can be any corrective wave. The fourth wave. We usually see, all right, a triangle in the fourth wave. But for now, be aware of the key level that I've already mentioned. All right. So this is about the Elliott wave analysis, the Elliott wave forecast relating to the DAX index. So the next step is what? The validation of the Elliott wave forecast and so on. We will quickly go to the yearly chart to see whether the yearly chart will give us additional information. So price went up, boom time, come back down, and then went up again, and then come down again. I like my wave count. Prefer the second wave here, and then it went up here. Now, if we compare, so on the yearly chart, do we have any additional information? And not much that can help our wave count as such. All I can see is that, okay, you can see. So that's why we say here, the additional information is that, for instance, I'm on it here. Okay, they say 12 months here. So you see, there was a bullish tendency back up, another one down here. Normally should be a shadow here. Maybe when the year end, should turn into a shadow here. So when you see a third wave with a shadow on top of it, it's alerting us that probably the fourth wave is already underway, unless the third wave is extended. So one more thing, as I'm talking about third wave extension, though we are talking about the fourth wave here, all right, expectation of fourth wave of a higher degree for a DAX 30, don't forget that the third wave can be extended if there is no Elliott wave violation so far. It looks to me that we are seeing a bit of violation if you want to talk about Elliott wave extension right here. Another thing that I want to do is to connect the high of the first wave and the high of the third wave. That will help us when the fifth wave is underway. So draw that trend line there. Top of the first wave, top of the third wave. Draw that trend line. Extend it into the future. Make it infinite trend line. Don't make it finite. Want it to cool. So but now we don't have enough room to extend it. But just understand that the price start going now from in the fifth wave, that will help us. Sometimes the fifth wave will go exactly and find a resistance on the edge of that trend line. All right? Sometimes it may not even reach it. All right? But it's one way to forecast the fifth wave, the end of the fifth wave. All right? So after the Elliott wave forecast, Elliott wave validation, going to the mind of other traders, we map up the chart. I already started mapping out the chart. I put a pitchfork tool on it. I'm talking about horizontal key level. One more thing that I want to add to those that are trading the DAX 30 index, is this. Okay, we talked about it before, but probably you have forgotten, or maybe you didn't think of it. All right? Anytime you see two trend lines, you see now We have this trend line there, up there, and the top of our pitchfork tool, you see there, it creates a beautiful angle. We can draw on our chart, yes or no, draw the median line to those angles there. Leave it there on your chart. So that median line, I'll color it now. I think red will be nice. Right, leave it there. You are mapping out the chart. Why do you need to map it out? So you may find higher probability trading setup around one of those key levels or on or near a hot spot trading zone. A hot spot trading zone is the intersection between two key levels with a trend line or horizontal key level. In intersection, here is a hot spot trading zone. The price did not find support there. He is looking for the next this is the hot spot trading zone. Why? Because the intersection between the level of 9818, okay, and that green line there, which is the median line of the upper half of the pitchfork tool. So map it out and look for a trading setup. Is it attracting the price? Is the hot spot attracting the price? All right. You come here, find support, bounce up one more time before coming down again. All right. All in all, like I said before, 1055A, prior to bullish signal above, prior to bearish signal below. Okay. 38.2% Fibonacci retracement level, 9818. All right. Below that, we have another line there, 9303. All right. Remember those key level, and also 8148. So you map it out, and now you are looking for a trading setup. When you see a trading setup, what you need to do, you know the drill. You implement a different time frame trading method to time the market. So we talk about using Elliott wave to time the market. That's one stage. So what do we mean by one stage? Because now we are talking about forecasting the price, expecting it to go down. So we are timing the market. So we will say this is the best time to look for an opportunity to sell if there is a sell signal, yes or no. But what we forget is that though we are using the Elliott wave structures, the Elliott wave theory, the Elliott wave pattern to forecast the market, sometimes we forget that in order to drill deeper into that market timing, we should also use a different time frame trading method. So what is happening? A lot of Elliott wave traders, they still say, okay, yes, it's now in the fourth way, I'll go and sell using put option. But they forget to use a different time frame trading method and they end up losing. So now they sell the price in the fourth way, they sell the price bounce up. They say, oh, I lost. The Elliott wave is not good. So you forecast it. Now, use a different time frame trading method to control the risk and to make your market timing more accurate. So when we are talking about accurate Elliott wave forecast, it's about combining the Elliott wave forecast with the top-down trading method. In order to get paid, as I mentioned before, because it's pointless to dump money in the stock market, unless you have too much money, go and donate to 2-4 Elliott wave. Or unless you haven't lost so much, like some of us before in the financial market. Maybe you are a new trader, you got a lot of money, you say, oh, yeah, you are winning one day, you are losing one day. Or you can have a more winning trade and still, waste your account. So somebody can have a 12 trade, all right? So you have a 12 trade, all right? But you have 8 winning trade out of 12. That's excellent, yes or no? 8 winning trade out of 12, that's very good. But you can still lose more than somebody else who had a 6 winning trade out of 12. Because if you lose so much money out of those 8 trades, in comparison to the amount of money that other person lost in 6 trades, you may look at it straight away from the viewpoint and say, how many losing trades did you have out of 12 trades? And the person may say 8. You say, wow, that's a top trader. Another trader, how much? You say 6. You say, oh, you useless trader. Now, but now if you drill deeper, you say, how much did you lose out of those 8? How much did you lose out of those 12 trades? So the first person that had 8 winning trades may say, oh, I lost 50,000 pounds. All right? And you ask the other person that had only 6 winning trades, and you say, oh, I lost only 10,000 pounds. Who is the best trader? So it's not the number of winning trades, it's how much money have you dumped. So in order to avoid dumping money away, all right, give it to 2-4 Elliott waves or start applying a different time frame trading method, and I mean it. All right. Sometimes traders don't realize that they are wasting money. So if you have been trading for some time, for a long time, you can calculate, you can have a bit of idea, how much money have I lost in my lifetime in this messy market? It's a lot. So then you become more composed. You start applying a top-down trading method. You look for trading setup. You combine your Elliott wave forecast with everything else that I said before. So this will conclude our discussion today about Eagle Eye Frankfurt trader uses Elliott wave theory to interpret DAX 30 index. If this video has been truly useful to you, give us the beautiful thumbs up. If you dislike it, don't go away. Let me know in the comment section where you dislike it. Or it has been too long, nothing substantial in it. Okay, mark it down. I want to know, please. However, if you think that it's an essential tutorial, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. I love traders that are sharing our video, and I cannot thank you enough. All right. Subscribe to our channel. Our channel is 24 Elliott waves. Digit 2, digit 4 Elliott waves. Be sure to click on the notification bell so anytime we are about to live stream a pre-recorded video, YouTube will alert you, okay, so you may be on time to watch it together with me. Alright? Sometimes I post video first on Facebook. My Facebook page is stochastic-MACD. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders, recording a video today on the 30th of December 2018 to wrap the year up. The title of the video is Eagle Eye Frankfurt trader uses Elliott wave theory to interpret DAX 30 index. As I said before, if you trade the Dow Jones index, you can also trade the DAX 30. They are mimicking each other. Happy trading to you all, and I will speak to you soon. Happy New Year to you. All right, see you in 2019. We are the GSTW 24 traders. Thank you for watching.